Do you want to just introduce yourself and
Sure.
talk about Wavecrest? And
Yeah, so Wavecrest is a growth equity firm, started in about 2016. We're actually right down the street at Copley Square. It's a beautiful 10-minute walk for me. By the way, I have to agree with Steve. I realized today that this is my first real non-team event outside of Wavecrest post-COVID. And I mean, I'm really enjoying it. So I look forward to more of that. Thank you, Progress, for putting it together.
thank you.
We invest in founder-led companies. So founders who are generally not in Silicon Valley, the blood, sweat, and tears, bootstrap companies, growing them nicely, great product, great retention, and they're at a point where they want to really accelerate go-to-market, maybe take some chips off the table. That's what we do. So our philosophy is us and the founders tend to be the biggest shareholders, and so it's a two-step thing for the founders. A little bit of liquidity from us, but real liquidity kind of down the road. So we're pretty operationally focused. We're on our second fund. We've been very fortunate to do a transaction with Progress Partners, and I have to say they represented a founder-led company, and as I was reminding David earlier today, without Progress, the transaction would not have happened. They were true partners of the company, so thank you guys. And thank you for having me.
Great. Great. My name is Gordon Burns, and I'm with Bullhorn. We are a enterprise software company, SaaS, born and bred in Boston in 1999. Yeah, huge Boston success story. We are now close to $400 million, 1,500 people, privately held. We serve the staffing and recruiting industry, so think Hayes, Adecco, Randstad, Kelly, all the way down to very small entrepreneurial-led operations like Alku. Here's another Boston-based company. And we provide the software that helps them run the entire talent lifecycle, everything from sourcing to interviewing to onboarding to paying the workers to invoicing the clients. So we really close the whole loop. So it's mission critical for the industry. And we've been growing really quickly after the sort of initial shock of the pandemic when warehouses and other sort of businesses figured out that there were a lot of people that weren't going to work because they had COVID or were afraid of COVID, and so they turned to the staffing industry to basically find workers. And so, we've been growing quite quickly. I think this year we'll grow close to 20%, and that's off of a very large base. And a lot of our customers are growing, 2 or 3x that. And so I think the challenge for us going forward is really going to be finding workers. Chris and I were talking about this earlier. There is a real structural problem with the workforce in the US right now. And our customers are trying to figure out and sort through that problem, and that's really what we're about.
Thank you.
Yeah.
We're going to talk about that a little bit, that trend.
Yeah.
Thank you both for being here. We'll make this a little bit interactive, but I'm going to walk through some slides, and maybe I'll turn to you for some input, some thoughts.
Sure.
So on with the show. So we always want to start with what's happening in the deal market, and we're starting with M&A, and you guys can't see the slides.
Actually, there's a reflection right there.
It goes up and right, so that's all you need to know. Look, we've been through an extraordinary period over the last several years, but in particular through COVID. I think we all have lived through it. We all have wounds and bruises and battle scars for this, but I think it's really benefited a lot of us in terms of our ability to get involved with businesses, both from an advisory and investing standpoint. We've reached a point, I think, with the interest rate shifts and some of the economic issues about where we think about where are we going. I think we at Progress, in terms of what we see, feel very bullish about where the world is going from here in terms of deal volume, but I think there's definitely some variability about what we think is going to happen. But this is just a great story. We also want to talk about investing, and so we've just put up a slide for venture investing into the software space. Again, up and to the right, I think where we are today through June 30th, $37 billion is equal to the whole investment in 2020. So it seems clear that we're not going to double the first half of 2022 to finish out the year that way, but I don't know. What do we know? Anyway, so really breathtaking. There's some changes in what's happening in terms of big checks being written, and et cetera, but it continues to be a good environment. Just want to do a little dip into a couple of areas that we are tracking closely at Progress in terms of specific categories, and where, in particular, where we think COVID has really changed the game, and perhaps permanently. Collaboration, employee engagement, and mobile marketing, areas that we think are very interesting these days. We start with collaboration, and we're all now gotten very familiar with Zoom and Teams and Slack. This is a great graph that I thought, just to see how did the world change when COVID hit. And Teams, I think for Microsoft, was a kind of a little hidden piece of an office suite that we all were very comfortable with, spreadsheets and word processing. But take a look at how this went to 70 million users in the period of several months as COVID hit. And I superimposed it with Slack because we think about kind of best of breed and we think about legacy vendors. And not everyone, I think, in the future is going to want to buy products from Microsoft, but some people are just going to do it because it's easy. And so a lot of us are using Teams that way. I look today, Teams is at 270 million users. Zoom is at 300 million users. So we'd need to add another screen here to put that graph up to where it is now. So this is really a fundamental change, right? Business used to be in person, and now we're really talking about some hybrid of in-person and over computer. And we have benefits and advantages. Here's another one around employee engagement that we think is really interesting. As we hit the recession and we saw employment go down and then V bottom back up, the Great Resignation is what we've all been reading about, which is people moving. Pay is up. People feel very transferable in terms of what they're doing. And for employers, like we all are as well, how do you retain employees? And in a hybrid environment where not everyone's going into the office, you don't have necessarily that in-person experience. We've talked a lot about employee engagement. We talked about incentive systems. You can't just tell people, come on to the office, there's donuts. You really have to make it work. It's a management issue. Technology has a role to play in terms of how people train and develop and progress. And I had a great conversation earlier about how personality types can really drive how people engage with each other and how to make a more productive workplace.
Absolutely.
Last thing, we all learned about how companies are marketing. How do they connect with people? Retailers, restaurants, they suddenly lost a lot of people coming in. The whole concept of foot traffic has really changed, and how these businesses engage with their people and how they get customers coming back for more business. We like mobile marketing. Mobile marketing, we think, is here to stay. We look at from 3% to 13% over the last couple of years. Text messaging campaigns, et cetera. I advised on a transaction earlier this year where we sold a business that did marketing solutions for restaurants. And that's how restaurants made it through the COVID period, because they didn't have people in the office necessarily. We like the space. We think it's got a lot of future. And we always want to be talking about multiples. Everyone wants to know about valuation and multiples. Here is a look at multiples over the last 20 quarters or so. And it's really interesting to see how valuations got really high in 2021. We're talking 15 times revenue. I mean, wow, think about that. Where we are now as of the second quarter, 7 times revenue is actually equal to or even below a lot of where it was before COVID. And so, you know, people understand recurring revenue businesses and models and how to value that, but I think there's a more sophistication about, you know, understanding what margins, understanding what category of software you're in. This is interesting to see where this will go. This one I'm going to give credit to the Progress Economics Department for. This is a slide we looked at one of our recent offsites, and in 2022, I think the world has changed and investors are really valuing profitability over just grow like hell. And we superimposed 2022 this summer, and we see slower growth 8.9, faster growth 9.5. If you look back a year ago, it was 18 and 28. So the premium on growth a year ago, when we were just grow like hell, has changed. And now we're really talking about, are you profitable? Is that important? And I think some of the folks here would probably echo that. I think where I want to end here is just to talk about some of the things we see from a pure technology perspective and how enterprise software